we have to be very clear what is there in the income statement, what are the items to be shown in the income statement, and what are the items to be shown in the balance sheet. Very systematically, we should not do any error. Okay, totaling error, that is not that much marks will not be deducted, but technical errors we should not do. Okay, now the moment first you will come across a question in the examination, assume this is the question, is it right? Now there are something which is there in the balance sheet, there are something which is there in the income statement. Now what they are asking, first you have to read the requirements. They are asking, see the thing, what they are asking you prepare the statement of profit and loss account and other comprehensive income. Is there other this is the first one. Second one, what they are saying, they are asking you statement of changes in equity. This is the second one. Okay, the third one, what they are saying, they are talking about statement of financial position. Three things they are asking us. Anywhere, any doubt, you have to ask me and make it a point. They have mentioned very clearly that they should be show all workings, notes not required, but you have to show all workings, means all calculations. Okay, now this is the first thing. The second one, what is the additional information? We said that additional information should be in both income statement as well as in the balance sheet. Okay, two places we will get. They have, see, read slowly. Inventory at 31st March was valued 95,000 is the value of inventory. Including in this balance was some 15,000 value is there. What happens? It has been damaged. It has been damaged during the year. And it has been sold for how much? 15,000 inventory was damaged. It has been damaged. It has been sold for how much? It has been sold for 5,500. Of this, they gave you commission. How much they gave commission? 500. I mean, how much they got it? They got it an amount of how much? They got it an amount of 5,000. This is the value of the damaged inventory. This is the value of the damaged inventory. Okay, we will see how it will happen. Depreciation, see the thing. Depreciation is clear. In the last question, in example, they say it is straight line, but most of the 99% depreciation on buildings will be on straight line. Depreciation on machinery will be on the reducing balance. We have not done reducing balance. Now in this case we will do reducing balance. Next, land is revalued upwards, means plus. Okay, upwards. How much has been revalued? Revalued by, means the value of the land has been increased. Okay, 100,000. We will also see two places. Land income tax. This comes in where? This comes in other comprehensive income. This is not a regular income. Okay, this is not a regular income. This is not a business income. This is not a operating income. Okay, that is the range, and we have to show in other components. Income tax 165 to be provided for the year how much? 2007. The bank loan is repayable in how much? 5. We will talk about income tax and we will talk about the bank. The only thing what we have to mention, it have to be income statement, it has to be in the balance. Two places we have to show. Okay, this is the first thing you have to okay. Once we have done this, come back to the question. Okay, come back to the thing. In the question, what they are saying, read the things. Okay, now I will ask one by one. Okay, I will ask one by one how the things has to be done. Okay, now administration expenses, where it will become, it is an expenses. Okay, it is an expenses. When it is an expenses, where we have to show
Profit and loss statement.
profit and loss statement. Okay, if it is an expenses, where we have to show, it is in the profit and loss. See, I am writing for here. Okay, income statement expenses. Okay, income statement, distribution cost,
Income statement.
income statement expenses. See, share capital,
Balance sheet.
statement of changes in equity and balance sheet. Okay, and balance sheet. We'll show in both the places. Okay, next, share premium, share premium is also part of share capital. Okay, share premium is also part of share capital. Statement of changes in equity and balance sheet. It will never change. Okay, it will never change. Keep it in mind. You do 100 questions, it will no. You do any financial statements, it will remain same. Revaluation surplus. Any idea? Yes or no? Don't if it is wrong also, don't worry about that. I am here to help you.
Statement of change in equity.
Pardon?
Statement of change in equity.
Statement of changes in equity and balance sheet. Dividends paid.
Income statement.
Pardon?
Income statement.
Dividends paid, where you will show?
An income statement.
See,
Yes.
there are two ways, okay? There are two ways. I am putting like this. If you are not preparing statement of changes in equity, is it? They will not ask you to prepare statement of changes in equity. Then we have to show it as an income statement, as an expenses. But if they ask to prepare statement of changes in equity, if that is the case, I am writing it separately. Okay, if that is the case, you have to show in statement of changes in equity. If they ask you to prepare statement of changes in equity, you have to show here. If they don't ask statement, most of the time they'll say you prepare only profit and income statement and balance sheet. Then we have to show where? We have to show in income statement as a expense. Cash in hand and bank. Mazin.
Balance sheet.
Income statement.
Cash at bank. You have cash in your bank account. What it is?
Balance sheet, sorry. Yeah, balance sheet.
It is in the balance sheet. I will not write balance sheet. I will write it as a current asset. Current asset will be in balance sheet. Okay? Are you clear?
Yeah.
Okay, current asset means balance sheet. See it, you memorize this. Next question automatically you will tell before I explain you. Receivables, Salim.
Should be in current asset.
It is a current asset. Always. Receivables comes from where? See, you will have a credit sales. Is it right? You will have a credit sales. Credit sales will give you receivables. Receivables will give you cash. Is that? Receivables will give you cash. This is also a current asset. This is also a current asset. Always. Okay? Once you say current asset, it will never change. Interest paid.
Income statement.
Pardon?
Income
Current
statement.
liability.
Income statement, it is a expenses. Finance cost. Is it right? You are paying interest. Is it right? You are paying interest. It is a finance cost. Okay? It is a finance cost. Next, dividend received.
Income statement.
Pardon?
In the current asset.
Received. You are receiving dividend.
An income statement.
It is a income statement. It is a income. Okay? It is a income. Income from where? Income from investment. You have made some investment. On that investment, you have received some dividends. Okay. Interest received.
Income statement.
Pardon?
Income.
Income statement. It is a received. Okay. It is a income statement. It is a income. Okay. We will add. Okay. Land and buildings.
Balance sheet.
Balance
Fixed
sheet. It is a non-current asset. Okay. Fine. It is a non-current. They have given separately. Buildings is 100. Land is 380. We will do this. When you are doing that, we will separate. See the thing. Now we are doing something different. Okay. Wherever things coming new, I will explain you. Land accumulated depreciation. Accumulated depreciation is nothing but depreciation till now. Okay. Depreciation till now. How much they have calculated depreciation? 430. Okay. See the thing. They gave you this one. I will tell you. Okay. 480. In that you will have land is how much? You will have a land of 380. You will have a buildings of how much? Buildings of 100. Okay. Now land, there will no depreciation. Never ever. Okay. Buildings, by default you should understand this is accumulated depreciation. Accumulated depreciation is how much? Means till now the depreciation is how much? 30. Means
70.
Is it 70? 70 is nothing but, I am writing here, is it? We'll say net book value. In the next chapter I will tell you about this. Okay, next chapter I will tell you. We call as a net book value, or you call it as a carrying amount. Okay, remember these words. This will be always with us. Okay, just remember, I will explain you in the next chapter 2. Okay, we will have this 70. Plant and machinery is how much? Plant and machinery is a what? It is where we have to show
Balance sheet.
balance sheet. It is a non-current asset. Again, they have given you depreciation. Is it right? They gave you depreciation 400 minus 170. Now they say one is on the straight line method, one is on the return down value method. Okay, means again how much is the plant and machinery? Plant and machinery is 400. Okay, how much is the accumulated depreciation? Accumulated depreciation is 170. Okay, how much you are getting difference? Difference is 230. This is called as a net book value or carrying amount or return down value. Okay, we use different words, but all words are same. Is it return down value, net book value? Understand what? Don't get confused. Either we will say it as a net book value, you call it as a return down value, or you call it as a carrying amount.
All this name same?
100%. Okay, these are same. Okay, it will never change. Most of the time, if you initially we call it as a return down value, but slowly and steadily we use the word carrying amount. Okay, we use the word carrying amount. Fine. Now, retained earnings.
Balance sheet.
Statement of changes in equity, balance sheet. If they don't ask statement of changes in equity to prepare, directly we have to show in balance sheet. Purchases,
Income statement.
cost of sales. Okay, income statement. Oh, is right? Sales is
Income statement.
income. This is opening inventory. See the thing. 1st April. Okay, 1st April. 1st April 2006. And if you go down, is it right? They have mentioned inventory what? They have mentioned 31st. This is the closing inventory. Is that 31st March 2007 is the closing inventory. 1st April 2006 is the opening inventory. We are going to show opening inventory where? Opening inventory in cost of sales.
Sale.
Okay, cost of sales. Okay, trade payables. Payables, you have to pay.
Liability.
Current liability, short term, it is not a long term, okay? Short term, always current liability. Bank loan,
Current liability.
long term, is it right?
Non-current liability.
Is it right? It is a long term. If it is a long term, it is a non-current liability. If it is a short term, it is a current liability. Is it clear to you now?
Yes.
Now,
Okay.
what we are doing here, we are seeing, when you are talking about cost of sales, is it right? This is a rough formula, okay? What is the cost of sales? I am writing here very clearly. Opening inventory, is it right? Opening inventory plus purchases minus closing inventory.
Closing inventory.
Very simple. This is the paper, very easy paper, okay? Very easy. You do the calculations, you will get marks. I'm telling you this, okay? Now we will start one by one. Wherever it is required, we will put the things in order. First we have to start with what? First you have to start with what is there? They say that profit and loss account. Is that what they have mentioned? Statement of profit and loss account. With me you have to do, I will ask you any time to send me the screenshot. You have to take the picture, you have to send. Okay, any time I will ask, and every time, every class I will ask one person randomly. First one, A, statement of profit or loss of which one? Of Aaron for the year ending. For the year ending, write down with me separately on a separate year ending 31st March 2007. If you are doing on Excel sheet, I will appreciate. Okay, if you are doing on Excel sheet, I will appreciate. If you are doing on paper, that is also fine. But slowly and steadily, we have to do on Excel sheet. Okay, we have to do on Excel sheet. Okay, now, first where we have to start? Income statement. First, where we have to start income statement. If you have this format now, just keep this format in front of you. If you have taken the printout, okay, revenue or sales or income, all are same. Okay, there is no difference. It is the only difference is where we are doing. Okay, don't get that revenue. It is given sales. In some cases revenue, in some cases sales. Some cases, if you take the bank, it is interest income. Is that? If you take the bank, it is interest income. Fine. Now, what is the first thing we have to start?
Sales.
Sales. See, once you are doing this, is that? Once you are doing this, put one small x, okay? Put small x, so that it will be easy for us to identify. How much is the sales? It is in thousands, okay? It is in thousands. See the thing, it has been given in thousands. So we also write down there thousands. How much is the sales?
Uh, 2,165.
2,165. Okay, next, minus cost of sales. Okay, minus cost of. There are so many things are there in cost of sales. Is that there are so many things has been attached to cost of sales. What are the things you write down? This is working one. Okay, this is working one, cost of sales. Okay, we will write here, I will put everything. You write in your own way. Okay, working one, cost of sales. Okay, cost of sales. Now, what happens? The first thing what we have to take in cost of sales is opening inventory. How much is the opening inventory?
Opening inventory.
140.
140.
Put one cross here, okay? Put one plus purchases. How much is the purchases? Purchases. How much is the purchases?
1,260.
1,260. Very open. It is like a class. It is a class. Don't worry about that. You should be very communicative. You have to talk disturb me as much as possible. I am telling you this. Now, okay. How much is the closing inventory?
$140.
Closing inventory how much? See the things. Closing inventory is how much? 95. Okay, it is in thousands. Okay, 95. In 95, what's happening? Is it 95? There is some issues are there. Is it right? In 95, this is in thousands. Don't get confused. Okay. In see, this is separate one. Okay, this is separate one. 1 minute. This is separate one. Okay, this is a separate one. Okay, this is the separate. In the closing inventory, what's happening? There is some damaged goods are there. How much is the damaged goods? Damaged goods. Note 1. Okay, note 1. How much is the damaged goods? How much is the damaged goods? Damaged goods are 15. Is it right? Damaged goods are 15. Okay, we have, this is the damaged goods. Now, in these damaged goods, what happens? What happens? They have sold that one. Okay, they have sold it. How much they have sold? They have sold it for 5,000. And how much commission they have paid? They have paid commission
500.
of how much? 500. Okay, they have paid commission of 500. Now, damaged goods sold is how much? Only damaged goods. Okay, damaged goods how much? 5,000. Okay, you put as 5,000. Okay, now in this 5,000 they have 5,000 5.5. Okay, they have paid some commission. Is it right? They have paid some commission. Okay, they have paid some commission. How much is the commission? They paid a commission of 0.5. Okay, now they paid a commission of 0.5 means how much they have recovered? They have recovered how much? 5,000. Okay, they have recovered how much? 5,000. Means how much is the loss for them? How much is the loss for them? They have damaged goods of 5,000, 15,000. Okay, they have see the note 1. Okay, they have damaged goods of how much? Here I'm putting the thing. They have damaged goods of 15,000. On this 15,000, how much they have sold? 5,500. You paid some commission to for the people. Okay, 500. How much you got it? You got it 5,000. Now, what is the loss you are having? Can you tell me?
10,000.
10,000. Okay, this is the loss of damaged goods. Okay, this is the loss of damaged goods. How much is the loss? Loss is 10,000. Is it right? Loss is how much? Loss is 10,000. Any doubt? Ask me. I know where you will find doubt. You stop me. Okay, where you will I can make it very clear about the things how it's happening. Okay, now see, this only we have to take. Okay, this only we have to take. How much is there? If you take this much only, closing inventory will be how much? Closing inventory 85. Is that closing inventory? Are you clear about this? Again I will say closing inventory is 95. On this inventory there is a damage was there, 15,000. They have sold it. Definitely you have some stock which has been damaged. You have sold it. You have sold it for 5,000. Okay, you have sold it for 5,000. The means total loss will be how much? 15,000 minus whatever you have sold it. That is the income for you. Okay, that is recovery. The balance is the loss. How much is the loss? Loss is going to be 85. Okay, loss is, sorry, closing inventory will be how much? Closing inventory will be 85. Are you clear about this?
Yes, doctor.
Okay, now what they say, this is point number 1 is over. Okay, we will do that point number 1 subsequently in other places also. Depreciation, take point number 2. Depreciation for the year is charged to how much? Cost of sales. They are asking very clearly where you have to show. We have to show in cost of sales. Depreciation. Okay, depreciation is how much? Cost of sales. Buildings is there, plant and machinery is there. Is that buildings is there, plant and machinery is there. Fine. Now, for this we have to make sure, okay, for this we have to make sure how it is going to be worked out. Do we have to, see, whenever you are doing this, better to calculate depreciation. Okay, better to calculate, this is working 1. Is it right? This is working 1. Okay, this is working 1. This is working 2. Okay, we have space. Yes, we have lot of space. This is working 2. Working 2 is depreciation. Is it? Now, depreciation working. Particulars. I am writing as clear as possible for you. There is a land, there is a buildings. Is it right? There is a plant and machinery. Is it right? Now, given is how much? Given is how much? Go to the question. How much is the plant and land and buildings? 380 is the land, 100 is the buildings. 380 is the land, 100 is the buildings. Okay. Now, plant and machinery is how much? Plant and machinery is 400. Okay. Now, what we have to do? We have to first we have to deduct accumulated. Is it accumulated depreciation? There is never be a depreciation for land. Okay, never. Buildings are how much? Accumulated depreciation 30. Okay, up to 30. Okay, a building. What is the depreciation for plant and machinery, Salim?
It is 170.
170. Okay, 170. Take this one. Okay, take this one. How much is there? This is the net book value. Okay, 380. 380. This is 70, and this is how much? 230. Is it? Now, current year depreciation. Is it right? Current year depreciation. How much they say in point number 2, current year depreciation? 5% on straight line. Straight line means on the beginning value. Reduce, you see, this is, if it is straight line, see, I will say buildings, okay, buildings is a straight line method. Straight line method means this one is, okay, there is no doubt on that. This is the straight line method. Okay, this is the straight line method. Is it right? How much is there? How much is there? This is 100 times. What is the percentage they gave? 5%. See, on cost.
5%.
On cost. Okay, on cost means original value. 5%. How much it will come? 5. Is it okay? 100 into 5%, how much? 100 into 5 by 100. Do the calc. Where is the calculator? Are you clear about this?
Doctor, building
Yeah.
what? One building Salam.
Straight line method.
Straight line method.
Straight line
Straight line.
method. Is that they say here very simply. What they have mentioned here, they have mentioned straight line. Straight line means same value. Okay. Every time how much? Every time straight line means on 5%. On cost. Okay. Straight on cost means on original value. Is that on cost means on original value.
Before the accumulation.
Yes.
Alright.
Fine? Fine. Before accumulated depreciation. Good. Is it before accumulated depreciation? Fine. Next, written down value is what? This is written down value. What is that they say? They say that reducing balance. Is it right? This is the reducing balance. Is it right? Reduce the balance. How much is there? I am changing the color. Okay, plant and machinery. Plant and machinery. How much is the reducing balance? 230. 230 means after accumulated depreciation. Cost means, write down in your notes. Cost means before accumulated depreciation. Return down value means after accumulated depreciation. Okay? Cost means before accumulated. How much is there? 230. What is the percentage they say? The percentage they have given is how much? 30%. Is that the percentage they gave is how much? 30%. How much it will come? Margin?
Again, 230 and 230.
Yes.
Okay. Three.
How much?
3.
230 into 30%.
69.
69.
69. Is it? 230 into 30% how much? 69.
69. Yeah.
69. Okay? Now, how much is there? Do the total again. It comes to how much?
230 minus 69, 161.
330, 380, 65, 161. Fine? Now,
Yeah.
they are asking us to see what they are saying in the point number 2. Their point number 2, they are asking that it has to be shown where? It has to be shown in cost of sales. Is it right? It has to be shown in cost of sales. If it has to be shown in cost of sales, what we have to mention? Is right? It has to be shown in cost of sales. Depreciation. Depreciation on buildings. How much is the depreciation on buildings? Depreciation on buildings is how much? 5. Okay, it is expense. Depreciation on plant and machinery is how much? Depreciation, how much we have calculated? 69.
69.
Total how much? All that is 140 plus 1260 minus 85 plus 5 plus 69. Yes, Salim.
One, 4, 2. $1,389.
Salim.
Just a minute, okay?
Whoever I request, you have to tell them, okay, by name. Whoever I am requesting, that's very simple. Means everybody has to keep calculator ready with them.
179,
How much?
179,
140 plus 1260. See, 140 is opening inventory. Purchases is how much? 1260. Closing inventory is how much? Minus closing stock 85. Then you will have depreciation on buildings is how much? 5. Then you have plant and machinery depreciation is how much? 69. Total how much you will get?
1,241.
1,000.
241.
Check again. 140 plus 1260 plus minus 85 plus 69 plus 5.
1,389.
Good. This is called as cost of sales.
Anything else to be added here, or this is the only?
This is the only one.
the.
Okay, now.
This is the format. Huh?
Yeah, this is. Now I will tell you. For this, they will give you 2 marks. And for this, they will give you 3 marks. Understand, Pat? Now you will understand marking system. I will give you the marking system also, how it will mark. Is it? For this, they will give 3 marks. For this, they will give you 2 marks. Cost, now cost of sales is how much? Cost of sales is 1389. Are you clear about this?
Yes, doctor.
Okay. Now take this cost of sales, working one. How much is there? 1389. Okay, 1389. From the sales you have to deduct. Okay, from the sales you have to deduct. Slowly do it. Don't rush. Okay, but follow me. How much you will get? Margin.
Yeah, second. 165 minus 1389. 776.
776. 776 is called as a gross profit. Is it okay, Hussein?
Yes, it's okay.
Okay, next. After this, see, we have done this. Okay, next. What we have to do? We have to see the expenses. Okay, we have to take expenses. What are the expenses are there? One by one. Okay, one by one. The first one is administration expenses. How much is administration expenses?
250.
Administration expenses. Okay, administration expenses. How much is there? 250. You put one cross mark here. In the examination, this is very important. Is it? Next, distribution is also, you see, we have written income statement expenses. Cross it. Is it right? Cross it. How much is there? Distribution expenses.
Main expenses. Yeah.
Okay, cross it. How much is there? 295. Any news about Ramadan?
Not sure, doctor, whether tomorrow or not.
Inshallah. Khair.
Still.
Okay, anything is there, just you put the message. Okay, this is one is there. Is that administration and distribution? Then once we have done this, only these two will come. Okay, you will put what? You will get operating profit. Follow these things. Okay, operating profit. How much is the operating profit, Hussein?
Two, 3, 1.
$776 plus minus 250 minus 295.
Total expense is 545.
Huh?
Total expense 545.
No, my dear, you have to 776 minus 250 minus 295.
231.
231.
51. But sir, I have a question.
Yes, tell me.
This is under which method? Direct method or indirect method?
There is nothing like that. You are not. We are having only one method. This is that there are two things are there. Is it right? We have two things. I told you this yesterday only. Where is that format? Yes. You asked me right question at the right time. Okay. This is the method 2. Is it right? This is the method 2. Is that we are not doing this? I told you. Is that whether you do method 1 or method 2, till here it will be same. Only thing is you will have difference in OCI, that's all. Okay, we have only one method. Okay, we are doing this always. Is that always this method only? Okay, always this method only. Now you see the thing. What we have done, take the method revenue minus cost of sales, gross profit, distribution cost, administration cost. You will get profit from operations. Then you will get finance cost, investment income. Then we will have profit before tax. Then we will pay, see, on the profit we pay tax. Okay, on the profit we will pay tax. Once we pay tax, then it is a profit for the year. Then we will say OCI, other comprehensive income. What we do in comprehensive income, we will make any revaluation is there. Okay, we will add revaluation. Is it right? We will add revaluation. Will any income is there on assets, we will add or we will less. Okay, other comprehensive income. Are you clear about this?
But sir, if there is any gain or loss from selling asset, we
It
should
will-
put it under OS.
OCI. Okay, why it is under OCI? You have to ask me this question. That's very important because this is the business income. This is the business income or business expenses. Is it right? This is the operating. Is that this is related to operating? You are doing, but this is what? This is related to what? This is related to assets, fixed assets, as non-current assets. You cannot mix anything with respect to this is long term, this is short term. That is the reason we have to show separately. Otherwise, what this happens again, I will tell you why we are showing advances. This happens one time. This happens regularly, all the time. Every year it happens. Is it right? It happens every year, round the year, every 12 months. Is it 12 months? This happens. That is the reason. The purpose is you have to, why OCI, other comprehensive income, is this income happens once in a while, once a time. It will not happen regularly. You cannot see what they say mentioned in the land has been increased by 100,000. Every year land will increase by 100,000. Can you imagine? Is it be possible?
No.
No. That is the reason we are going to show the land value as separate, other comprehensive income. Is it okay?
Yes.
Fine. See, if you clarify these small points now, once you go in advanced level, you will find it very easy. Okay, you will find it very easy. There is what they have mentioned. They have mentioned operating profit, or what they have mentioned? They have mentioned it as a profit from operations. Both are same, okay? Both are same. Now, is it okay? Next.
Yes.
What we have to do after this? What we have to do after this? See the format, okay? See the format. I am taking back you to the format. In the format, they say finance cost. Finance cost is minus, investment income is plus. Finance cost is minus, investment income is plus. Okay. Now, what is the finance cost? Check slowly. Go to the question. Interest paid. It is there.
Yes,
It is there. How much is the interest paid?
25.
25. Minus, okay, interest paid. Next, investment income. See, put one cross there. Is it right? Put one cross there. Next, you have received some interest. Is it there? You have received some dividends also. You have received some dividends.
Yeah.
How
15.
much?
15.
15. Put one cross here. Add dividends. Dividends received. How much? 15.
15.
Next, interest received. We have received some interest also. Put one cross mark. How much we have received interest?
1.
1. Okay, we have received. Anything else? Anything else? Land, this is plant, this is up and trade payables, bank loan, nothing is there. Is it? All are related to balance sheet. Are you clear about this?
Yes.
Now, total it how much you will get? Yes, Hussein. 231 minus 25 plus 15 plus 1. You have to be happy. Everyone is having calculator or not? Trust. Tell me very clearly. Who doesn't have calculator with them now?
I have phone.
Don't use phone. Get one calculator, small calculator.
Yeah. I have.
Okay, please. How much is there?
222.
222.
22.
This is called as profit before tax. Is that? This is called as profit before tax. Okay. Now you have to pay income tax is there anywhere. You see point number 3. Okay, you see point number 4. What is there? They gave you. Read. Hussein, read.
Income tax.
Income tax of 165,000 to be protection to the year to 31st March.
Okay, we have to pay income tax. Okay, we have to pay income tax. Income tax. I will write note 4. How much? 165. Is it right? Note 4 is how much? 165. How much is there? Margin?
A second.
222 minus 165.
57.
57. This is called as profit for the year. Is it right? This is called as profit for the year. Now the things will start. Okay, now the things will start. What we have to do? We have to add other comprehensive income. Why we are saying other comprehensive income? There is a land value. Is it right? There is a land. We should not show. Now you will understand. We should not show land there. Okay, we have to see point number 3. Yes, Salim. Read point number 3.
Land is to be revalued upward by 100,000.
100 means land value is increasing. Okay, land value is increasing. This is going to be shown in OCI. Okay, always always, okay, add, is that add revaluation on land, is that add revaluation of land. Note 3, how much? 100. Okay, note 3, how much? 100. That's all, nothing is there. Okay, we have covered point number 1, point number 2, point number 3, point number 4, point number bank loan also we have paid interest. Okay, we have paid interest, is that bank loan. Now all points we have covered. Okay, once we have covered all the points, then do the total. How much you will get? $57 plus 100, it comes to how much?
157.
This is called as total comprehensive income. Is it total comprehensive income for the year? Total comprehensive income. How much is the total comprehensive income? 157. Is it clear to you?
Doctor, from where this 157?
57 plus 100.
57 plus 100. Okay.
57
Alright.
plus 100.
Okay, clear.
Okay, 57 plus 100. Are you clear about this? Yes.
Yes,
Salim,
okay.
Mazin,
Yes, yes,
and Hussein.
Yes, Doctor.
Okay.
There's one more student in the group.
Pardon?
There is one more student in the group also.
Yeah, I know, my dear. Sumaya, I know. I know, dear. Special people, don't worry about that. Okay? I know. Okay? When I am saying Hussein means I am saying all four. Okay? You understand why I am not taking name, okay? I know. I trust everyone. Okay, Sumaya?
Okay, Mr.
Yeah. Don't worry, I am with you, okay? I am here. Okay? Inshallah khair. Don't worry, for me all are same, okay? Are you clear about this?
Yes, Doctor. It's okay.
Now. Is it? Now what we have to do? We have to do second one, okay? We have to do second one. What is the second one? Statement of changes in equity for the year ending. For the year ending 31st March 2007. See what happens. Where we have, see, first write particulars, okay? First write particulars. Now, first I will explain you the format, then I will come back to this, okay? First I will explain what we have done in the format. Is it right? Where is the format? Format is somewhere here, okay? Format is somewhere here. Is it right? See the thing. What is the share capital, share premium, revaluation surplus, retained earnings, total equity? Is that share capital plus share premium plus share retained earnings is equal to how much? Equal to total equity. Okay, this is the total column. Fine. Share opening balance will be there. Again I am repeating particulars, share capital, share premium, revaluation surplus, retained earnings and total equity. Is it? Share capital, share. Again, now I will tell you one thing. Okay, sometimes they will give plus or minus. Okay, sometimes they will. We have share capital, you have share premium, you have revaluation surplus, If you go somewhere here from the bottom 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, sixth one, they have the retained earnings. Is right? From the retained earnings. How much is there? How much is there? Is that share capital?
235.
Okay, now. Okay, where is that? Yes, share capital, share premium, revaluation surplus, retained earnings. Are you understanding, Sumaya?
Yes, Mr.
Okay. Retained earnings and total. See, if you pass now, it means I am passing. You don't know, I will put so much efforts on my students. Is it right? It is like I am doing exam, that much efforts I will put. Understand the point? First, opening balance. Opening balance is nothing but given. Is that? Opening balance is nothing but given. Given in the question. How much is the share capital? One by one. Starting from Hussein. How much is the share capital?
295.
200. Allah Kareem. 270, my dear. How much is the share capital?
I read that the up one.
You cannot do
295,
that.
sir.
270. How much is there? 270. Put thousands here. Okay? Put thousands here. Next. Sumaya, what is the retail share premium?
$80.
80. Okay? 80. Next. What is the revaluation surplus?
20.
Next. What is retained earnings?
235.
235. Good. Total how much?
$605.
Okay, now. Fine. Next. Next. Okay. What is the slowly and steadily see? We have done, see, they have, how much is the, now, how much is the dividends they paid, how much they have paid dividends? They paid dividends in, what I told you, I changed the color. If they gave you only income statement, we have to show expenses. But if they gave you in the statement of changes of equity, then we have to show there only. Now what happens? Dividends, from where you will pay dividends? You are doing business. You will pay dividends every year. From which amount you will pay dividends?
Profit.
Current profit. Okay, current year profit. How much is the current year profit? Current year profit is how much?
1 week. 57, yeah.
57. Okay, current year profit is how much? See the thing. Current year profit for the year. Is it? Profit for the year. Where we have to show? We have to show in retained earnings. How much is there? 57. Is it right? Profit for the year. And after profit for the year, we have shown something, OCI. How much, what we have showed? What we have showed, revaluation of land. It is there?
Evaluation.
How much is the revaluation of land?
100.
100. Okay. Here revaluation surplus is there. Is that column 1, column 2, column 3, column 4, column 5, column 6? Is that revaluation? Is that revaluation of land? Is that right? How much is there? In the same column you have to show. How much? 100. Okay, in the same column you have to show 100. Are you clear about this?
Yes, that's it.
Next, we have paid dividends. See the things. How much you have paid dividends? It has been given here. How much you have paid dividends?
27.
How much?
27.
27. Dividends paid. We will pay dividends from the profits. Okay? 27 minus. Here also 27 minus. Nothing is there. Okay? Now, do the total. Two 70, 80, 120, 235 plus 57 minus 27. How much?
735.
265, 735. Are you clear about this?
Yes.
Okay? This will show, these are the closing balance. This amount we will show, okay? This amount you are going to show in the balance sheet. 1, 2, 3, 4. Plus this automatically will show total of 735. Is it clear? Hussain, Sumayya,
Yes, sir.
Mazin and Salim. Okay? Point number 3. Statement of financial position. Is it as at 31st March 2007. See, listen my words, okay? Whatever I say, follow. Inshallah, you will get the benefits. Daily, once we have done, immediately do it on the Excel. Okay? Take your break, okay? Ramadan is there, take your break, 15 minutes, whatever you are doing, don't lose momentum. Understand that? Very important. You should not lose the momentum, okay? The moment you lose momentum, things will change, okay? Okay, even see, I will tell you, if you have a break, automatically it will take time for us to recover. Okay, fine. Okay, now, how much is that? Write down this. Particulars, amount and amount. We have taken 3 columns just for our understanding. Okay, first what we'll take? We'll take assets. Okay. We will take assets, we will take non-current assets. Okay, we will take non-current assets. How much is the non-current assets we have done? Working 3. Is there working 1, working 2 we have done? Is there working 2 we have done? How much is the non-current assets? $380 plus 65 plus 161. Okay, now non-current assets. Land, how much is the land? Land value is how much? Yes, Sumaya, land value is how much?
380.
380. Okay, land value is how much? 380. Next, add revaluation. Note 3. How much? 100. How much? 100. Note 3. It comes to how much? 480. 4 people are there. Okay. One person will say, Sumaya will say all non-current assets. Hussein will say all current assets. Mazin will say all equity. And Salim will say all non-current liabilities and current liabilities. Next. What is the buildings is how much? Working 2. Buildings is how much?
65.
Who is this? I asking Sumaya. Buildings is how much? Buildings is how much? 65. Okay. Next. How much is the plant and machinery? Please tell.
161.
Good. Add. How much you'll get?
$706.
706. Good. Is it right? It is non-current assets. Next. Who has to tell?
Me, Hussein.
10. Current assets. Okay, current assets. What are the current assets? First, always we have to take closing inventory. We should not change the order. Okay, how much is the closing inventory? We have done in working 1.
85.
85. Next. Means here we have done income statement, we have done balance sheet. Okay, we have done in both the places. Okay, next. Depreciation also we have done in both the places. Okay, buildings is there. Revaluation is also done both the places. Is a taxation we will do. Okay, taxation we will do. Next, after this, is it right? Means put cross mark here. We have done land and buildings. We have taken this one, accumulated depreciation, plant and machinery, accumulated depreciation. Is it right? We have done this. Next, we have done here it is, see the things, current assets. What are the current assets is there? Left hand side, see the screen on the left hand side, how much is there? You have cash at bank and cash in hand. Is it right? And you have receivables. First you have to write receivables. Order is very important. Okay, receivables. How much is the receivables? Hussein. How much is the receivables?
$20?
Huh?
233, huh?
233. Okay? 233. No problem. I understand. It means there is nothing is there. Okay? 233. What is cash in hand? Cash at bank?
3.
How much? Cash
3.
at bank is how much? 3. Okay, good. How much is the total?
$321.
How much?
321.
Plus 706.
706 plus 85 plus 233. 1024.
Again,
27.
1027.
3.
these are total assets.
National Bank.
Fine. Next. What have we have to write? Equity and liabilities. Is it right? Equity and liabilities. Now, equity and liabilities, first write share capital. How much is the share capital we have done? Statement of changes in equity. How much is there?
270.
270.
270.
I am writing here, okay? I will total it. You can do that. This second column you can use for your additions and for our convenience, okay? Next. Only thing is you should have clear understanding what you are doing. That's very important, okay? That's very share capital. Next. Share premium is how much?
80.
80.
What is it called? Equity and
Liabilities.
liabilities.
Okay, equity and liabilities. Next, revaluation surplus is how much?
100.
What is the total of revaluation surplus?
120.
120. Retained earnings is how much?
265.
265. Everybody is following?
Yes.
Total how much?
735.
735. Write down total equity. Next, non-current liabilities. Who has to tell?
Salim.
Yes. Loan is there, Salim. Okay, loan is there. How much is the loan? Bank loan is there. Last one. How much is
100.
there?
100.
100. Only one thing is there, non-current liabilities, okay? Only bank loan. Okay, bank loan. How much is there? Bank loan is 100. Okay, next. Current liabilities. Nothing is there, okay? Current liabilities. See the things, okay? Now, we have taken share capital, we have taken share premium, we have taken revaluation, we have taken dividends, cash is over, receivables over, okay? Next, bank loan is over, okay? Bank loan is over. Next, current liabilities is what? What is the next one? Current liabilities, we have
Trade payables.
trade payables. How much is the trade payables? 27.
7.
Okay, trade payables are how much? 27. If you find any difficulty, tell me. I am here to support you, okay? Don't worry about that. Inshallah khair. Okay, now we have point number 4. Income tax is there. It is there. Point note 4.
165.
165. We have to, everything we have to take in two places. Is that already we have taken?
Yeah.
Income tax. Income tax 165. We are, because it is in thousands, okay? It is in thousands. We are taking, it is in thousands. Fine. It is in thousands. How much is there? 165. Is it? 165. Now, you check whether we have covered all the things or not. If see the thing, that is the advantage. You put that cross mark, you can understand we have covered or we have not covered. Anything is missing, it will be clearly visible. Note 1, note 2, note 3, note 4 and note 5. Okay, we have done all. Okay, we have done all. How much is the total about this? Fast.
One zero two seven.
1027.
Yeah.
Is it right?
Yeah.
Okay.
Yeah. Got it.
Fine. Now it's clear for you. Very structured. Now you till last class we follow the same process. We follow the same process. First, another example I will do. The moment I will do, once you are clear about this, almost with some plus or minus, 15 marks are with you. Okay, 15 marks are with you. Are you clear about this? Everyone is fine? Mazin, Sumayya, Isma, Salim and
Yeah, done.
and who is missing? I am
Same.
Hussein. Is it okay?
Yes, yes, okay.
Fine. What they are saying is not for profit, government organizations, not for charitable institutions. You have Oman Charitable Institution is there, Oman Cancer Association is there. Is that the main areas for not profit and public sector are very different from those. They are not working for the profit. People, companies will work for profit. If they want to make profit, they want to make wealth. Okay? Whereas non-profit, they want to provide service. Is that they want? Here in the profit, board of directors are responsible, accountable. In non-profit, who are responsible? Trustees. Managers are responsible for trustees. Trust will be there. Okay? For the trust, people are, managers are responsible for the trustees. And here, directors are responsible for whom? Directors are responsible for the shareholders. External finance means you can borrow, is right? You can borrow loans if you are working for a business. Here, what it is not loans. What we will get? We get donations. Somebody will donate, is it right? Somebody will donate. This is the difference between, is that you will just make it a point. This will be there for 2 marks. The difference between the profit oriented and non-profit oriented. Fine. The same thing happens. In profit oriented, accounting standards are designed, okay? Measure finance performance, profit or loss. Report financial position. Is that we are talking about the things. We are very much concerned about profit and wealth. In non-profit organizations, their purpose is very simple. Their purpose is for doing the service. They want to be very effective, efficiency and economy. Is it? We call it as effectiveness, economy and efficiency. This is called as value for money. Is it? This is called as value for money. Are you clear about this? What is profit? Companies, SAOGs are for the profit. Charitable institutions, government is for non-profit.
Non-profit.
Fine? Now.
Yes.
Now you have to tell. Okay? Question number 2. One by one. Start from Ismail. Follow the sequence. Revenue, where we are going to show?
Income statement.
Before that, first you have to read the requirement. Prepare in the form suitable for publication. What they are asking, statement of profit and loss and other comprehensive income, statement of financial position, and statement of changes in equity. Is it right? Now, we have to do 1, 2, and 3. They say that they have given tax how much? They have taken tax as 470. Directors have paid dividend, final dividend is how much? 270. Is that? When we are preparing, that's most important. See, the directors declare dividends. We are preparing on when? We are preparing on 31st March. Is that? We are preparing on what? We are preparing on 31st March. But when they are paying dividends, they are paying on
April, 3rd of April.
3rd April. See, this is where they will test our understanding. Okay, this is where they will test whether you are following or not. Okay, this is only the thing that makes the difference in the students. Okay, understanding the thing. Dividends have paid after the year. This is called as, when we are preparing the financial statements, this is called as a reporting date. Always. And they have paid after reporting date. If they are paid after reporting date, we will have to take which or we should not take. We should take or we should not take.
We should not take.
We should not take. Okay? We should not take. Fine? Now, revenue will be where? Revenue will be in the income statement. Cost of sales, they have given directly cost of sales. We don't need to calculate. Okay? They have given directly cost of sales. We don't need to calculate. Okay? Income statement. Dividend received. What we'll do? We will add income statement. Administration expenses. Where we'll show?
Income statement.
Income statement. Distribution cost. Income statement. Is it right? Now,
Yes.
prepayment. This is first time you are doing. Paid in advance. Where will show? Anybody is there who will tell?
In balance sheet.
Where?
Current live.
Current asset.
Current asset. You have paid in advance. Is that? You have paid in advance. For you it is an asset. Expense. But you paid. Next month expense you paid now. It is an asset. Next month it will be expense. But this month it is an asset. Is it right? This comes in accruals. Accruals and prepayments. I will explain you at some point of time. Okay? I know where I have to explain. It is there. I will explain you in detail. Accruals and prepayment. Any prepayments, current assets. Dividends paid. Statement of changes in equity. They have given property, plant and equipment. Nothing is there. No adjustments. Non-current assets. Short-term investments. Where will show?
Current assets.
Current assets. This is opening inventory. Okay, this is opening. Trade receivables.
Current asset.
Cash and equivalent, Sumaya.
Current asset.
Good. Trade payables. Hussein.
Current liability.
Long-term loans. Margin.
Current assets.
Long-term liability.
Non-current liability. Long-term. Is that share capital? Fine. Statement of changes in equity. This is also statement of changes in equity. This is also statement of changes in equity. Okay? Is it fine?
Yeah.
Yeah. Point number A. We don't have that much calculations here, is right? We don't have that much calculations. Only we have things. We don't have workings at all. Okay. Now, Hussein. Hussein,
Yes. Yes.
take the screenshot and send me the what we have done last question.
For last question.
Yes. Immediately. I really appreciate, dear. I really appreciate. Alhamdulillah. I'm so happy about this. If you do like this now, I'm here to make you shoot. Okay? Alhamdulillah. I really appreciate you. Is it right? I will post it on the group also so that I will. Fine. Next, come back to this exactly. Okay. Now, one by one. First, what we have to take?
Revenue.
Yeah. See, we will divide it. Okay. We will divide it. We will start with. Whom? Tell me.
Sumaya.
Yes. Have fun, okay? Enjoy. Okay? Yes, Sumaya, I am here to help you. Okay? You will do income statement. Mazin will do statement of changes in equity, and Hussein and Salim will do balance sheet. Okay? We will divide it everyone. Okay? Yes, Sumaya, please tell. Now, first what we have to do?
Sales.
Revenue. How much is the revenue?
5,300.
Good. Next,
Cost of sales.
put one cross here, okay? Minus cost of sales. How much?
350.
Good. Total?
Total.
Hussein, your responsibility to tell the total, Hussein.
Okay, sir.
10,
3,950.
3,000.
950.
This is called as
Gross margin.
gross profit.
gross profit.
Don't write gross margin, okay?
But it's same, sir.
No. No means no. Gross profit. It is not gross margin. Okay? Gross profit. We never use gross margin. In my entire life, I have not used gross margin. Okay. Next, expenses. What are the expenses?
Administration expense.
No, Sumaya.
490 for administrative expense.
Next. Next. Put one cross.
Distribution cost
Distribution, how much?
370.
Distribution cost, how much? 370. Anything else? Anything else?
Second.
Interest paid, prepayments, nothing is there. Okay? See the things, nothing is there. Only this is expenses. Okay? Only these are expenses.
There is interest paid. No?
We'll come. After this, we'll get. We have to show this separately. Okay? We have to show separately interest. After profit from operations. Okay? After profit from operations. Okay? How much you'll get? 395. Hussein. 3950. How much?
3090.
3090. Profit from operations. Next. Is it right? Next. Now you have to show interest paid. How much is the interest paid?
$370.
370. Next. Put one. Next. Any prepayments, dividends paid, profit, short-term inventory.
Yeah.
Dividend
Dividend
received
paid.
is there. Income from investment. It is there. Third one. Third one. Dividend received.
Dividend received, yeah.
Is it right? Add.
Yes.
Add dividends received. Is it right? Dividend. How much is dividend received?
210.
210. Total how much? See, on the total income you will pay tax. Okay. Now you understand. On the total income you will pay tax. Okay. 3090 minus 370 plus 210. It comes to?
2930.
Huh?
2930.
3090 minus 370 plus 210.
2930.
Interest paid how much?
Oh, 190.
2930.
190.
How much interest paid? 190. How much you'll get now? 3090 minus 190 plus 210.
3,100.
3110.
Okay. This is
Yeah.
called as profit before tax minus tax. How much is the tax? They mentioned tax somewhere here. Note 1. Okay. How much is there?
470.
470. Tax. Note 1. 470. How much you'll get?
2,600.
2,600.
40.
This is profit for the year. You have to write whether, see, we don't have any revaluation, is it right? We don't have any revaluation, and we'll not take this, okay? We don't have, even, see, they say OCI, they are asking you OCI, other comprehensive income. We have to mention, okay? We have to mention other comprehensive income. Put as 0. See, you don't know this secret. I am telling you this. Even in examination, ACCA particularly, even for 0 they will give marks. Especially in tax. Especially in taxation. And other places also. If you put, you have to mention, they will give you marks. People doesn't know this. People say that when there is no value, why you have to put 0? No. If you see the marking scheme, if you see the examiner report, if you see the review, they say that for zeros also they will give you marks. Is it right? For zeros also they will give you marks. How much is there? 2,640. This is called as total comprehensive income. Is it okay?
Yes.
Next. Point number B. Yes, Hussein, Sumaya, Mazin and Salim. Fine. Point number 2. Statement of changes in equity for the year ended 31st March 2007. Okay. Now you see the things. See, there is understanding has to be there. Okay. Now, if you go the things, is it right? What is there? You have share capital, share premium, retained earnings. It is there. You don't have revaluation surplus. Revaluation surplus is there with us in the question?
No, it is not there.
No. Is it right? When there is no revaluation surplus, don't make a column for that. Okay? Don't make a column. If there is there, you put a column. Share capital, you will have share premium. Is it right? You have retained earnings. Is it? You have retained earnings. You have total. You don't have revaluation surplus. Don't keep a column for that. Okay? Nothing will happen. Nobody will see, that is the understanding. Okay? If there is column, we will, by practice you can understand this. Okay? By practice we can understand this. Is it? Opening balance. How much is the opening balance? Share capital is how much?
1,500.
1,500. Share premium?
800.
Retained earnings?
1,163.
1,500 plus 800 plus 1,163. It comes to 3,463. Hussein, it is your responsibility to check totals, okay? Any mistake is there, you have to point out for every time. This is additional responsibility to you. And it will change, okay? From one chapter to another chapter. I will tell you in the beginning. Okay? Next. Current year profit is how much?
After tax.
Current year profit is how much? Total comprehensive income.
264.
264. Where we I will write this?
264.
Which column?
Retained earnings.
Retained surplus.
Retain earnings. Is it right?
No surplus.
26. If you don't put brackets, it is plus only. If you put brackets, then it is minus. Now, they have paid dividends. See the things. How much they paid dividends?
390.
390. Okay. From which column we will deduct, Sumaya?
Retained surplus.
From which column we will deduct? 1, 2, 3, 4 and 5. Retain earnings. How much is there? 390. Anything is there plus, please check.
Okay.
Property is there. Property, plant and equipment, short term inventory. Inventory is also over. Trade receivables, cash, trade payables, long term share, fine. Okay? Nothing is there. We have taken that. We will not take final dividend. We have taken this. How much is the total of this?
5,730.
5,000.
713.
700.
13.
Okay.
But you have to tell this also now. 1163 plus 2640 minus 390. 3413. Is that we'll take these values, okay? This is called as closing balances. Are you clear about this?
Yes.
Next. The point number 3 is how much, what is? Write down here, okay? Note. The final dividend is paid after 31st March 2001. Paid or declared? Declared, not paid also, declared. Is it right? It is not paid, it is a declared. Or that, is it right? Is paid, declared after
31st March.
31st March. Will not be adjusted. Okay? Now, statement of financial position as at 31st March 2001. In thousands, okay? In thousands. Can I start?
Yes.
Just a second. Okay.
First, assets. Okay, non-current assets. Nothing is there. Property, plant, and no is no accumulated depreciation. Nothing accumulated depreciation is not there in adjustments, additional information. Nothing is there. Property of plant. How much is there?
4,250.
4,250. $4,250. Next. See the things. Anything short term is there, long term is there. Is there prepayments, short term, trade receivables? Nothing is there. Next. Okay. Next. What we have to write?
Current assets.
Current assets. Current assets. Order. Okay.
Accrual account.
Closing inventory is there. Closing inventory is there.
No.
Then no. Okay. If it is not there, don't write. Next. Receivables is there.
No. Wait,
Oh,
There is
receivable.
accrual
Yeah.
account.
Is there
418.
receivables?
Yeah, there is. Yeah.
Inventory is there.
Inventory is there.
No. See the things.
No, it's not there on
See. 31st March 2001. Sorry. We have made it opening inventory. 31st March. This is the not opening inventory. We have not observed this. See, we have not observed this. This is not opening inventory. This 31st March. This is the closing inventory. Why it is closing inventory? Date, check the date. It is 1st April or 31st March.
31st March.
When we are preparing our financial statements,
31st March.
31st March. Is that we are preparing on 31st March and inventory is housed when? It is 31st March. This is the closing inventory. Is it right? We have not focused on that. Is it right? Inventory. How much inventory? How much is the closing inventory?
114.
114. Okay, 114. Put one cross here. We thought it is. We have not seen. This is the mistake we will do. We have to check the dates. Dates are very important. Every other paper, dates are very important. Okay. Next. Receivables are how much?
Receivable.
Trade receivables.
418.
100.
418. Okay. Next. There is a short-term investment is there. How much?
Two thousand 2,700.
2,700. The sequence is very important. Okay. 2,700. Next. Anything else?
Accrual account.
Prepayments is there. How much is the prepayments? How much is the prepayments?
25.
25.
5,000.
This will never change. Okay, you do 100 problems, it will never change. 25. Go one by one. Okay, 25. And anything else?
Cash and cash.
How much?
12.
12,000.
12. Total how much?
3,269.
These two total how much? $4,250 plus 3,269. How much?
7,590.
Sumaya, are you understanding?
Yes, Mr.
Any doubt is there? Just immediately you ask me. Okay? I'm focusing on everyone. If I'm not telling the name, don't think that I'm not focusing. My ears and eyes are with you only. Okay? Now, equity and liabilities. Share capital. How much is the share capital? We have done on the left hand side, you see. How much is there?
1,500.
If I am putting two lines means after that you cannot do anything, okay? In accountancy, this is the language of accounting. If I am putting two lines means you have to stop there, okay? You should not take the things forward. That is the end, okay? Share capital, how much? 1,500. Next, share premium is how much? How much share premium?
800.
800. Tell, Alhamdulillah, tell with full confidence. I want to give you that confidence, okay? When I'm asking you, the moment you tell right, your confidence will increase. That's very important. Learning is important and getting confidence is also important. Don't worry that I have telling wrong, nothing. When I'm explaining you, focus on that. Automatically, inshallah, you'll tell right. Retained earnings. How much is the retained earnings?
3,430.
Good. Okay. Total how much? Don't do again. 5713. Okay. Don't do again. It is 5713. Next. Okay. This is over. This is over. This is over. Fine. Next, non-current liability. There is something loan is there, long-term loans. Is it right?
Yeah.
Non-current liabilities. How much is there?
$1,200.
Trade payables. How much is there?
$136.
Total.
$1,336.
Total.
1,336.
Plus 5713. All these are in one. 5713 1200 136.
7,049.
Huh?
7,049.
7000?
Okay.
7000?
7,049.
Check again. What we have missed?
Income tax.
Ah. Who is this?
Mazen.
Good. How much is income tax? Note 1. How much is income tax? 470. Thousands, okay?
470.
Now tell me the total.
Seven five 1 9.
Good. Are you clear about this? Yes, Mazin. Send me your screenshot, Mazin.
Inshallah. In a group?
Ah, fine, no problem. We know each and every one. Okay? If you put in the group, I will put one heart for that.
What do you say?
Yes, Alhamdulillah. If you do like this, now dear, trust me, I am with you. Okay?
Inshallah.
Inshallah, I am here with you. Okay?
Thank you a lot for your supporting.
Inshallah, I am there means I am there.